Hello and welcome. You're watching Last Tick here on News 9. I'm Suyash Maheshwari and this is a show where we bring to you the lowdown of the day's action on Dalal Street. And after 3 days of incessant selling, Indian markets ended flat on Friday, aided by recovery in select heavyweight stocks including Reliance Industries. Now, if you recall, in the morning we had pointed out that RIL could play perhaps a pivotal role in Nifty's recovery, or at least help the 50 share index find some near-term bottom. I mean, while the recovery has not really happened just yet, Reliance did help Nifty from falling further. Remember, in the last 3 days, the 3-day correction that we witnessed before today's partial recovery, Reliance was, apart from banking stocks, was the biggest drag on the market. The heavyweight stock corrected nearly 5% compared to Nifty's 2% or so fall. So, in my mind, RIL perhaps could play a big swing factor in the days to come. For now, let's move on and talk about the levels that you need to track. Nifty in the last 2 sessions has managed to close above the 50% retracement level of the most recent rally to record high. The 50% retracement level is now placed at 22,286. So that is your support one. But I think the bigger support will be around that 61.8% retracement level placed at 22,166 and 78.6% retracement level placed at 21,995 or 22,000 for all essential purposes. On the upside, 22,400 to 430 level will be a major resistance zone for the index. This is key as this is where the 20-day moving average and the 38.2 retracement level is. It is within this band. The trend, however, will only reverse from bearish to bullish once again after 22,500 is reclaimed. Remember, this is not only a key psychological level but a level from where Nifty has reversed course multiple times, and whenever the index was able to break above 22,500, it went on to scale new record high, and this has happened at least on 2 different occasions. So 22,500 becomes a key gatekeeper for the bulls. Moving on to the broader markets, they snapped out of their 3-day losing streak to end with decent gains on Friday. The mid-cap index was up 0.75% to end above 50,000 mark, whereas the small-cap index ended with 0.5% gains to end just below the 16,460 odd levels. Now, this has improved the overall breadth of the market as well, which remember was favoring heavily the bulls. Now the momentum has shared into the camps of the bulls. It was in the favor of bears, now it is in the favor of the bulls. So this could be another reason why that you can lend to the argument that we have made a near-term bottom. That said, Nifty Bank, that remains a major concern. The index, remember, is on a 6-day losing streak and it has fallen almost 2,000 points from record high. Even today, which was a weekly expiry for Nifty Bank, the index ended 0.5% lower but still managed to defend 48,000. And if you think this 2,000 point correction is bad, the cut in individual stocks is much deeper. Stocks like HDFC Bank, ICICI Bank, SBI, Punjab National Bank among others have slipped as much as 10% in this crash after the Reserve Bank of India proposed norms to tighten project finance by setting standard asset provisioning of up to 5% on loans. So keep an eye on Nifty Bank. I mean, that could continue to pull the markets lower. On the other side, Reliance Industries and the broader markets, that could provide a near-term reversal or some bit of a pullback in the days to come. But that's enough from me. Let's bring on a real veteran, a market veteran, Mr. Kranti Bhatini of Wealth Mill Securities. Sir, thank you for joining us here on News 9. I mean, the markets have corrected sharply in the last 3-4 sessions, right? Nifty is down close to 500 points. The damage in Nifty Bank is worse, with the index correcting almost 2,000 points. What do you think led to this correction? I mean, I ask this because in the last few months at least, the fall in the markets has been primarily linked to global headwinds. This is not the case this time around, right? Global cues have been nothing but healthy in the last 2-3 sessions. What's your take on this meltdown that we are seeing in the markets in India?
Yes, Yash, you rightly mentioned this time the correction and consolidation in the market is by and large within the triggers came inside the domestic factors. One thing is the measures that RBI is taking towards the infrastructure finance and lending is concerned, it's created some kind of knee-jerk reaction. And also, on the higher end of the market, we can see some kind of exertion and tightness we can clearly see. The follow-on buying is not coming at the higher end of the market. That's the problem at this point of time. We are at a pivotal level at this point of time, as you rightly mentioned, 22,500. This is the gatekeeping level for the markets. We need to wait and watch how the market is going to sustain above this 22,500. And also, the earnings season is not giving any kind of strong kickstarter to the bulls to raise above that 22,700, 22,500, that level. That also is the crucial thing at this point of time. Overall, what we can sense is markets are in a consolidation phase. We have the big days much ahead, the election, and also the feelers do comes from here and there, creating some kind of knee-jerk reaction in the markets. One thing is fundamentally, if we observe the things right now, the good thing what we need to observe and to take into consideration at this point of time is crude oil has been coming to a comfort level where it was the worrying factor a fortnight back, but whereas the crude oil is slightly consolidating around $79,000 per barrel right now. If it comes further below, that will give some extra cushion to RBI and also for the inflation going ahead, even though some kind of apprehension is there in the medium to short term. But if the crude oil can comes down considerably, that can be a pivotal trigger for the inflation and also going ahead, the monsoon. These are the triggers market is looking forward. As on date, the earnings season is it's mixed right now. We don't see any kind of positive surprises in terms of the earnings season is concerned.
All right, and sir, you were talking about the election season also going on, and that could be perhaps playing a factor. Do you think this low voter turnout is giving jitters to the market? I mean, maybe the participants are concerned that BJP may not be able to rake in as many seats as was previously anticipated.
It is completely presumption right now, Suyash. We are not psychologists. We are the people who track the market actively. But we need to wait and watch. These kind of news triggers do create some kind of knee-jerk reactions. That's causing the FIS to stay sideways. Okay, don't jump into the politics at this point of time. FIS are thinking and they're staying sideways. Let the time to pass. If the market is up by 10-15%, we can buy it later. But till now, let's don't get the life complicated. That's the reason FIS have been waiting on sidelines, and it's creating the knee-jerk reaction, and we could not able to sustain above that 22,700 level where the follow-on buying is not coming. That is the major uncertainty right now. But market can sense the policy continuity. But what the majority numbers we need to wait and watch. The mood of the nation will decide.
All right, the mood of the nation is on a hold. I mean, we need to wait and watch. Let's not get ahead of ourselves and drive theory as to why the market is correcting. There are multiple factors at play, as rightly pointed out by Kranti. Kranti, please stay with us. It's time to slip into a short break. We have plenty more to discuss with you on the other side.
We are trying a lot of experiments, innovations and ideas.
We came out with a new format in audio, which is audio series.
Listening for content-oriented company in India, which is a very unique proposition.
When we look at audio in general, we had music, which is like extremely old format, and then we had podcasts.
A natural extension to Pocket FM is to move from Hindi to regional content. I think I'd love to see their FY24 numbers, which they claim will be close to 1,000 crores. I think there are talks of them to raise another $80 to $100 million of funding.
This and more. Streaming on News 9 plus news is now content. Subscribe and get free vouchers.
For the very first time in our investigation, we unmasked the killer of Ravindra Matre.
In 5G, we have to stand with the world, and in 6G, we have to lead the world.
Winning a Grammy was an absolutely surreal experience.
Welcome back. You're watching Last Tick here on News 9. And before we went on to the break, we were discussing multiple factors that are at play here, and that is causing, this bit of jitteriness in the markets. One of the reasons is the fourth quarter earnings season, and we had two today, Larsen & Toubro and Hero MotoCorp. So Hero MotoCorp has actually come out with its results, and it has posted a very strong performance in the quarter gone by, which has helped it launch, log its best annual performance on both top line as well as bottom line for the financial year 2024. So net profit for the quarter surged by about 18.3%, coming in at 1016 crore versus 859 crore in the previous quarter. This has beaten street expectations, which was expecting the figure to come in at somewhere around 980 to 1000 crore. Revenue from operations surged about 14.6%, coming in at 9,519 crore, beating estimates which had pegged it at around 9,400 crore and about 14.6% higher from the year ago period when it stood at about 8,300 crore. EBITDA, which is earnings before interest, tax, depreciation and amortization, surged 25.5%, coming in at 1,359 crore versus 1,081 crore in the year ago period, and margins expanded by 130 basis points, coming in at 14.3% in the March quarter of FY24 versus 13% in the previous quarter, in the March quarter of FY23. And the stock also surged about 2.5% today. And Kranti, I'll come to you because we have spoken extensively about this auto space and this theme of premiumization that is playing out, and Hero MotoCorp has benefited greatly from that. I mean, the kind of returns it has generated for the investors in the course of last 12-15 months. I think on a 1 year basis, the stock is up somewhere around 80%. In the last 6 months, it's up close to 45% or so. And again, another very healthy quarter for the company. What's your outlook over here on the auto space? We have seen, on month-on-month basis, volumes for the entire auto space, including your passenger vehicle and commercial vehicles, they have, surged by about in double digits, at least in April. I think that was a 27% year-on-year jump in volumes. Is this a theme that, investors can still make money from, Kranti?
Yes, Yash. The numbers looks very strong. In fact, the numbers surprised on the upside. Going ahead, what we can sense at this point of time is the two-wheeler numbers, the rural demand has going to go up. Typically in an election year, the rural incomes tend to go up. That's what we are witnessing in FMCG space. And the same thing, what we can sense in the two-wheeler sector is concerned. The two-wheeler segment is going to post good set of numbers. That's helping Hero MotoCorp.
All right, very healthy set of numbers coming in from Hero MotoCorp, and I think what Kranti was saying, that rural demand is definitely going to help this two-wheeler space going forward as well. Remember, in the previous quarter, in the March quarter, rural demand for the FMCG at least, had outpaced the urban demand after nearly a gap of 15 months. So, rural, I think Kranti is back here with us. Kranti, you were sharing your thoughts on Hero MotoCorp and how rural demand is actually going to, provide that fillip to the entire auto sector going forward as well. Please continue, sir.
Absolutely, Swash. The rural demand is helping in a typical election year. The rural demand tend to go up. That's what helping Hero MotoCorp. And also the premiumization, that's what the change of consumer behavior right now, that's also helping the names like Hero MotoCorp. We are sanguine about the prospects of two-wheeler as well as the four-wheeler segment is concerned going ahead also. So investors can hold on to Hero MotoCorp at this level also. In fact, investors with a long-term horizon, definitely, they can add any dips in the names like Hero MotoCorp on a medium to longer term basis.
Alright, and speaking of rural demand, sir, rural demand for packaged consumer goods has outpaced urban markets for the very first time in 5 quarters. Rural markets, which had remained a significant concern for India's FMCG companies for longer than a year, has outpaced urban markets after 15 months. Rural demand was up 7.6% in the March quarter. On the other hand, urban markets reported a 5.7% year-on-year rise in demand, and the growth was slower than December quarter 6.9% increase. I think what's more impressive is the fact that we are seeing a big uptick or big outperformance in the home and personal care segment as compared to the food categories in rural markets. And while food categories witnessed higher unit purchases, the growth in HPC, that home and personal care segment, is largely driven by the popularity of larger pack sizes. Kranti sir, I'll come to you. We have discussed again this multiple times how rural demand has been a big pain point for Indian economy. Now we are finally seeing some green shoots of recovery. That should be a massive sentimental booster for not just FMCGs in my opinion, but consumption related stocks as well, right?
Absolutely, Suyash. This has been the positive trigger, keeping the markets to be in a very positive territory in the medium to short term. One thing is the key strength is coming from the rural demand. Okay, after a very long time, that shows the inherent strength of the economy. So I believe in the coming quarters also the rural demand is going to be robust in the coming quarters also. That's where the major trigger and advantage is for all the companies in FMCG, and also companies who are the consumer demand centric companies are going to get benefited because of the green shoots what we are witnessing in the rural demand and rural consumption is concerned.
Alright, any particular stocks that you like in this space, sir, to play on this rural recovery theme?
Companies, Suyash, even stocks like Colgate also outperforming. Normally people tend to don't look at the stocks, okay, but all these stocks are turning positive, and also names like Marico has been doing very good, and both the consumer centric goods like beverages also showing a strong strength due to the hot summer season.
Alright, and interesting that you picked beverages because I have been speaking to other experts as well, and that has been a theme that they are paying close attention to. Of course, there is a seasonality effect as well, but FMCG space on the whole, if rural demand picks up from here and if we have a better than expected monsoon, which is on the cards. Remember, IMD and SkyMet has both come out and said that they expect rural, at least normal monsoon in 2024. So that could be another reason why and another fillip for this FMCG segment. And this is a pocket of the market that has just not done enough for investors in the last couple of years. So perhaps it's time to look at FMCG counters. But on that note, let's take a short break. Kranti sir, please stay with us. We have plenty more to discuss with you on the other side.
Currently, the industry is facing a lot of challenges as far as demand is concerned. Basically, the US markets has slowed down because of high inflation.
So obviously, diamonds being a dream product, something which doesn't have a utility value or is seen as a luxury. So that obviously goes off your shopping list. That's the first item that will go off your shopping list, especially in recessionary trends.
That lab-grown diamonds are not mined, and they do away with the entire mining. So they save up on all the environmental damage that is associated with mining, and of course, the mining cost, which is why they're even more affordable.
People that is impacted by all these recessions are the artisans, are the people who work in this industry, right? But I think lab-grown diamond has allowed them to actually use their skills in the same product.
This and more streaming on world's first news OTT, News 9 Plus. Download now.
20,000 people dead and counting. What's happening in the United States of America is unprecedented. You will have to pay for this.
Welcome back. You're watching Last Check here on News 9. Banks are now reportedly seeking relaxation on the Reserve Bank of India's draft regulations that would require setting aside higher provisioning for the financing of infrastructure projects. For those not in the know, RBI on May 3rd proposed that banks be required to increase provisions to 5% of the loan amount disbursed for the projects in the construction phase. Until now, this requirement was set at 0.4%. When the project becomes operational, this can be reduced to 2.5% and then lowered to about 1% once the project reaches net positive cash flow and repays 20% of the dues. And this is as per RBI's recent circular, which was which came to light on May 3rd. Now, according to media reports, banks are now seeking graded provisioning requirement for high rated projects. For example, for government projects with near zero default risk, the provisioning may remain at the existing 0.4%. For AAA rated projects, the provisioning could be somewhere between 1 to 5%, and for others about 5%. And Kranti, again I'll come to you. What do you think will be the impact of this higher standard asset provisioning on the earnings of banks, apart from, I think, increasing the cost of fund for these banks?
Definitely, Suyash. It's a very surprising circular to the market. But what I can sense is RBI on a medium to longer term, they don't want to see any kind of excesses that are going to build up in the system, especially in the infrastructure financing is concerned. That's where it's a very proactive move at this point of time to slow down the pace of the action at this point of time. That's what I can sense. But the banks and NBFCs are going to represent to the RBI to further easing of the policy. We need to wait and watch, but it's a very proactive move where RBI is in a mood. They don't want to see any kind of extra excesses that are going to build up in the system. That's what the very proactive move RBI is proposing at this point of time. Throughout the world, Suyash, wherever the excesses bubbles kind of situation, we don't find any kind of trace of bubble or excesses at this point of time. But as a regulator, they don't want to give any chance to any kind of excesses in the system. So to keep the bank's books healthier, of course, it is going to impact the earnings of the companies in medium to short term, and also going to have some kind of impact on the boom what we are witnessing in infrastructure finance is concerned. We need to wait and watch still some more moves that's going to emerge.
Alright, but the stocks have certainly taken a beating, falling as much as 10%. But for now, we'll shift focus to the primary markets, because two new IPOs have opened for subscription today: TBO Tech and Aadhar Housing Finance. Now, TBO Tech, which is a prominent player in global travel and tourism sector, has seen a strong response on day one. Retail book has been booked 2 times over the quota reserved for them, while non-institutional buyer quota is also fully booked. Aadhar Housing Finance, on the other hand, has seen a relatively muted response so far. Kranti, between the two, if you had to bet on one IPO, which would it be, TBO Tech or Aadhar Housing Finance, sir?
Given the kind of mood is in the market, and also the kind of listing gains what the investors are witnessing, if the investors have a high risk appetite, they can subscribe for both the kind of issues. One is in terms of the disposable spending is concerned, the travel industry is concerned, we can witness a revenge kind of travel, and the demand is emerging in one space. And coming to other housing finance is concerned, okay, they are focusing on the lower end of the pyramid, targeting the SME and the lower end of the pyramid segment of the economy, where the margins will be higher. If the investors have a long-term outlook, they want to make any kind of serious investments in these sort of companies, one need to wait for some more time for the earning momentum to take place. Because Suyash, what happens is when everything is good, when there is a strong sense of primary market, investors try to jump and buy every IPO that comes on the street. But my sense is, if the investors are only looking for listing gains, they can subscribe for these IPOs. On the day one, if the listing gains are fantastic, depends upon the mood of the market that is the key trigger nowadays. So they can take capital from the table and coming to make any kind of serious effort in terms of the investing in IPOs are concerned. Just understand the couple of quarters market commentary and at least one earning season after listing that can make investors to make any kind of serious investments in the primary issues are concerned. So for listing gains, one can consider the both.
All right, words of wisdom coming from Mr. Kranti Bhatini. Sir, always great insights from you. Thank you for giving us time and your words of wisdom. Again, always a pleasure speaking with you.
Thank you, Suyash. It's always my pleasure to share my views with you. Thank you.
That's all we have in this edition of Last Check. Thank you for watching. We'll see you at 9:45 AM tomorrow on First Check. But coming up next is Business Plus.
Film and entertainment is definitely one of the levers for any country to build its brand.
We are getting global. I feel that we're just on the takeoff.
More and more films are becoming language agnostic.
Content is a universal language.
There's one audience in the world.
Absolutely. End of the day, we all are like brothers.